welcome back in. We're picking Phil's brain today. This is Lowcountry Money Talk, and we've got lots of questions for Phil. And here's the good news: he has lots of answers.
Yes.
You were back.
Yes, I'm back.
Okay.
Here we go.
We've been talking about inflation. We've been talking about, of course, how inflation is affecting our retirement and different investments. I think it's time to turn the tables a little bit and start talking about debt. And of course, we're talking about our country's rising debt because, as we know, this is very likely to have an effect on us. And how is the country going to deal with this? I mean, is there any other solution other than raising taxes?
I don't think so. Yeah. It seems like they just keep pushing it off. So the one thing, if anybody has any questions, and as we're going through this, they need to call in and get the Revolutionary Wealth Review.
Yes.
So we can take a look at everyone's individual situation and make recommendations for them.
Yeah, that's a great thing
I just
to do.
wanted to make sure. So if there's, you have $500,000, you bring in your tax return and all your statements, we want to take a look at it, and then we can give you, through the Revolutionary Wealth Review, here's where you're at. Where do you want to go? We can give you some individual solutions.
Right.
And Rachel will be the one to call on that. Now, getting back to what we were talking about, so we're sitting on soon to be $32 trillion in debt. Interest rates on government securities are rising, meaning that we're going to need more revenue to pay the interest on the national debt, because it was basically 1 or 2% for 15, 20 years.
Right.
Now it's 5%.
Okay.
So that's going to add even more debt. We've got a dysfunctional government. I guess most people would agree with me on that. They can't agree on anything. They don't care. They don't know what to do. So this is not going to help anything.
Yeah.
But, we can take control of our own situation.
Yes. Help us.
So we can review all these things. Now, taxes are going to go up in the future. Most people would agree.
Yeah, I doubt they're going to be going down in a long-term vision, right? Especially with the debt, like we're talking about.
We're setting on a tax bomb if we have a 401k or IRA that's not a Roth, because it hasn't been taxed yet.
Right.
So we're leaving all this potential taxation on our life savings, and we have a dysfunctional government that can't decide on anything. So that leaves a lot of tax risk to your retirement savings.
And we always think about risk in terms of the market volatility. This is a whole different kind of risk. It's the tax bomb. I like that terminology.
If I had $500,000 in a pre-taxed instrument, and let's say I was going to lose 30% of that $500,000 to taxes, right? That's $150,000.
Yes.
What if they raised the taxes to $50,000?
Ooh.
Then that's $250,000. That's $100,000 different. That's a big thing.
Yes.
So we still have opportunities. We have the current, Trump tax cuts from before. Those expire or sunset 2025.
Sunset makes it sound so much better, right?
Especially down here in the low country. So we have this year, we have next year, and we have one more tax year to figure out, hey, how much of this do I want to go ahead and pay taxes on while I know what the rates are, so I can configure that tax bomb.
Right.
Now, the other advantage, Jess, of that right now is the stock market's low. So if my equity side of my portfolio is down, 10-15%, and the taxes are down, it only makes sense to me that we go ahead and start paying taxes on this now.
Right, because it's less money and less taxes.
Right.
So you don't want to pay the taxes on money that's up.
Right.
Yeah.
So what most people are going to do, they're going to wait for it to come back up, and they'll say, oh, well, maybe I should start moving this to a Roth IRA now.
Right.
Well, why don't we do it today? Because as the market starts moving up potentially next year, and it goes up, whatever the percentage, we already settled our taxes on that part.
Right.
So that part will grow tax-free, and the government will not share in that.
It feels better paying it later because you're up and
Put it off.
But
Procrastination.
Actually, this makes a whole lot of sense.
Well, plus you got your tax return in front of you because you just completed it.
Yeah, absolutely.
So bring it in. Let's take a look. Let's see what our wiggle room is, and let's say, okay, I had a couple come in the other day, and it's like, okay, we could do $40,000 this year, so let's move $40,000 from our traditional IRA to our Roth IRA.
So Smart. And that revolutionary wealth review Phil was talking about at the top of the segment, that's no obligation. You can call Rachel, lay everything out, and they'll walk you through some really important things about your financial picture. It might be surprising, so it's a great thing to do. Another great thing to do is make sure you don't miss the last segment that's coming up after the break. Stick with us.